us for our weekly market wrap-up is Mark Wenzel from the Hopkins Group. Afternoon, Mark.
How are you today, Michael?
Good, thanks, mate. Now, it's been an interesting week of trading, and I see that James Hardie has actually downgraded its profit forecast by 10%.
Yeah, absolutely. So again, another building materials bellwether that's reported a downturn in the building construction industry in the US and Europe, and a slighter slowdown here in Australia. But I guess it's a real signal that interest rates are starting to impact demand, and building materials is certainly an area where it's impacted quickly. But it's a bigger impact in the US and Europe as they started raising rates earlier, and I would expect that construction activity here in Australia to slow sharply in the coming months.
And what about the central
profit?
banks?
Sorry, the downgrading profit is on the back of warnings, as we discussed a couple of weeks ago from Reece, and James Hardie reported that the downgrade only became apparent in the last 45 days. So they're saying that over the last 45 days, construction activity's fallen significantly, and that, you know, again, is obviously a sign that that rates are starting to impact, and their stock is down 40% in the last 12 months.
So the central banks, they're having the effect that they were trying to have?
Yeah, absolutely. And certainly it's my view and is that, you know, the central banks need to pause the rising of the rates, you know, to determine how much effect they've already had on the economy. Interest rate rises take anywhere between 6 and 18 months to show up in economic figures. And we're now sort of into that 6 or 8 months since the US and Europe started raising rates, and 6 months really in Australia. So they really have no idea at this stage as to how much of an impact those really sharp rises of interest rates are having in the economy. And my view is that they need to just take the foot off the throat for the time being, and just to see where things settle and see what the impact of demand is, to avoid, you know, plunging the economies into recession.
Now, Medibank have been in the news for all the wrong reasons, and their shares continue to decline.
Yeah, absolutely. I mean, we talked about it a few weeks ago as well, when the announcement that the data had been hacked and that 13.9 million customers' information was out there. And, you know, the share price has fallen a further 10% this week on the back of, you know, expected that with the data hacking out there and the information out there, and it's been really widely reported that, you know, people's medical records are out in the public domain, that lawyers will circle the company and try and obviously get some customers' money back through class actions. And certainly the expectation is that the class action lawsuits can run into, you know, billions of dollars. And, you know, part of the release of the information was the hackers sort of gave a Confucius quote that a man who commits a mistake, doesn't correct it, is committing another mistake. And obviously Medibank said that they wouldn't pay any ransoms to the hackers, and the data's sort of starting to come out. So it's really important for people that have been affected by the information leak to be really, really vigilant when it comes to approaches to them, asking for information and or bank details and that type of thing about their organisation, or as Todd Woodbridge reported, that they had all his medical history and saying that he hadn't paid bills at the hospital. So just make sure you double check if you've had your information stolen and people approaching you for money.
Now, the midterms, the pollsters seem to have got it wrong again. What's your take on it?
Yeah, so the midterms, again, it's a really important time in the US. You know, the Republicans needed to win a handful of seats in the lower house to take over control of that, and it appears that way. While voting's not final, it appears that they may get the lower house, but certainly there wasn't as a decisive change as was expected, with the Republicans not winning as many seats as they had predicted. A lot of sort of commentary around this, you know, where the Donald Trump perhaps is losing some of his gloss, and that the people are backing the Democrats with regards to you know, the management of the economy and perhaps Joe Biden. So it is a little bit problematic that they lose control of the lower house, but it seems again that with 3 seats in dispute, that Joe Biden would maintain the upper house, and hopefully, I guess that gives him a little bit more firepower to enact some of his policies that he's looking to do over the next 2 years before the next, total election. And, if not, I mean, they can be a little bit lame duck if they can't pass policy through both sets of houses. And, for the US economy, that's really essential at this time, because with inflation the way it is, they need that sort of monetary policy to smooth the effect of the fiscal policy, which is the raising rates from the Reserve Bank of America. So it's a really interesting time, but perhaps it means that there won't be a Donald Trump running for president next year, because the Republicans didn't do as well as what people were expecting in the midterms.
Here's a question for you off the cuff. Will this see more money go towards gold now, with the American dollar looking a little bit uncertain?
It's a really interesting one, gold. The expectation is obviously as inflation rises that the gold becomes a store of value. My view is that now, with interest rates where they are, the cost of holding gold is higher than it was, obviously. So, I mean, if you don't get any income for holding gold, so you can either put it in a term deposit, for example, and get 3.5% versus you're nothing for gold, and obviously you're hoping for that price appreciation. So again, depending on what happens with inflation, I think will be the key to what happens with gold. So if interest rates start to roll over, with inflation coming down, my expectation would be that the gold would sort of maintain its value without sort of appreciating. But if inflation increases, you can expect further increases in the price of gold for sure.
Great. Now, I don't feel so bad missing the top of the market when even the fund managers can miss the top. What have you got to tell us about that?
This is sort of a little bit of a side piece, but I guess it just goes to show how difficult it is to pick tops and bottoms in markets. With fund manager Hamish Douglass, who was the former CEO and Chief Investment Officer at Magellan, and he was one of the founding partners and built up the company significantly. He sold 13 million shares this week at $9.10, earning him about $118 million in income. So obviously a really nice payday for him. But if he had sold at the top of the market, some 2 years ago, he would have made an additional $733 million. So it just goes to show that it's really difficult to pick tops and bottoms in markets.
Yeah, and paper gains and losses are just that.
Absolutely.
Right. Mark Wenzel from the Hopkins Group, thanks so much, and we'll see you next week.
Thanks, Michael. Appreciate it.